Hello everyone. In this video, we will learn how to classify the accounts to identify if the account increases by the debit or the credit side. The first group of accounts that we will see are the assets. These are the resources that the firm has to operate. Is everything that the company has. Examples are the money you have in cash or in the bank, the money that your customers owe you or accounts receivables, the merchandise you have to sell, buildings and installations, furniture and equipment, trucks, and the machinery you have to produce, among others. Other group of accounts is the liabilities. These accounts represent what the company owes and are also a source of assets, since we can buy assets by borrowing money or purchasing on account. Usually, we borrow from the bank, but we also owe money to our employees, like in vacations that we accumulate along the year, and of course the purchases on credit, what we owe to our providers or suppliers. Then we have the owner's equity, which is everything that the company really possesses. The owner's equity is calculated subtracting assets minus liabilities. That is, what the company has minus what the company has to pay. But we will see the accounting equation later. Another group is revenues or incomes. These are the accounts that we show what the company received on behalf of the sales of products and or services. Another groups are the outcomes. The outcomes are the accounts that represent an outlay of money. This group is made of cost and expenses. The difference between one and the other one sometimes is difficult to define, but we are going to discuss that later on. Among the most common costs, we have the merchandise for sale, transportation and related costs like inland freight, customs expenses, and others, expenses as rent, the supplies we need to work, commodities like electricity, water, gas, and telephone, and of course the taxes over earnings that every person and business has to pay to the government. Now, the groups of accounts define if the account increases by the debit or the credit side. Let's take a look to the basic accounting equation. Assets equal the liabilities plus the owner's equity. That means that all what you have equals your total debt plus what is really yours. In other words, everything what you have minus everything that you owe to others represent what is really yours or what the company really possesses. On the other hand, the owner's equity increases by the profits of the period, and the profits are calculated subtracting the total incomes or revenues minus the total outcomes. Beside that, the profits of the period increases the owner's equity. For that reason, the actual owner's equity plus the revenues or incomes of the period minus all the outcomes, that is, the cost and expenses, represents the new owner's equity. Using this last presentation, we can modify the basic accounting equation saying that the assets must equal the liabilities plus the owner's equity plus the revenues minus the outcomes. If you remember this, it will be easier for you to remember the side used to increase each group of accounts because the extremes increase by the debit side while the center increases by the credit side. That means assets and all outcomes, both cost and expenses, increases by the debit side. Liabilities, owner's equity, and revenues increases by the credit side. You can use a hand to remember the side on which each group of account increases. The thumb and the little finger increases by the debit side. That means assets and expenses and costs. All outcomes are costs and expenses, remember. The rest of the groups, liability, owner's equity, and revenues increase by the credit side. In other words, the three central fingers. I am sure that reviewing this presentation you will learn how to classify the accounts and therefore how to increase them. Thank you very much for your attention.